What if one choice you make today quietly decides whether future you gets to relax with money in the bank or spends retirement stressing over every bill? And what if that choice doesn't require some fancy degree, a six-figure salary, or rich relatives handing you a head start? The truth is, there's a ridiculously simple strategy most people ignore. And it starts with setting aside about what many people casually burn on little daily extras without thinking twice. I'm Vanessa, and I break down how tiny money moves can turn into huge long-term wins. If you're into building real wealth without complicated investing talk or sketchy get-rich-fast nonsense, subscribe to the channel and tap like if this helps you out. Now here's the heart that should wake you up. Recent money studies keep showing that a huge chunk of Americans would struggle to cover even a basic emergency out of pocket. Pause on that. A routine brake repair, an urgent vet visit, or one surprise doctor invoice can throw their whole financial life off balance. And no, this isn't only about people earning minimum wage. This includes people with respectable salaries, diplomas on the wall, and lives that look perfectly stable from the outside. But behind the polished image, a lot of people are running the same loop over and over. Earn, spend, repeat. No wealth. No cushion, no real momentum. They may have the nice apartment, the upgraded phone, and the trendy weekend habits, but underneath it all, they're financially fragile and don't even see it. So what if you could step out of that cycle? What if there were a strategy that actually works, and it starts with an amount so small you'd barely notice it leaving your account? Today, I'm going to show you exactly how saving and investing just $100 a month can completely change the direction of your life. Before we get into the numbers, think about this. When people hear the phrase build wealth, what do they picture? Usually it's hedge fund pros moving millions around, startup founders cashing out for insane amounts, celebrity investors buying entire blocks of property, or somebody getting lucky with some wild windfall. That stuff gets attention because it's dramatic, but it's not normal. It's not how most people actually become wealthy. The real secret to building wealth is honestly kind of boring. It's not flashy, it doesn't trend. Nobody makes a viral post about it because it doesn't feel exciting in the moment. But it works. The formula is consistency, time, and compound growth doing the heavy lifting for you in the background. And here's where it gets good. If you manage to save just $100 every month, you're already doing better than a huge percentage of people around you. Seriously, that one habit alone puts you ahead of most of your peers financially. Not because $100 is some giant amount. It's because most people never train themselves to save consistently at all. Think about what $100 looks like in real life. For some people, that's a couple of food delivery orders, a quick beauty haul, or a few convenience store stops that barely register in the moment. It might be the random extras tossed into an online cart late at night, or those sneaky little purchases that drain your account one tap at a time. The real question isn't whether $100 exists in your life. The real question is whether you're willing to stop feeding consumption with it and start feeding your future instead. That takes a totally different mindset. You stop seeing money only as something to spend and start seeing it as something that can grow. Now, I know what some people are thinking. Vanessa, $100 isn't enough to matter. And if you're barely getting by, finding that extra $100 can feel impossible. On the flip side, if you're doing okay already, $100 might sound way too small to care about. But both of those reactions miss the whole point. Let me put it this way. Imagine a coach telling a room full of young adults that putting away just $100 a month could eventually make them millionaires. Most of them would laugh. It sounds too small to create that kind of result. But this isn't about luck. It isn't about fantasy. It's about math. It's about compound interest doing something absolutely wild over a long enough period of time. And honestly, the best part of this strategy isn't even just the money. It's the identity shift. Once you commit to saving $100 every month, you start paying closer attention. You notice where your money disappears. You get better at spotting the difference between things you need and things that just look cute in the moment. You build discipline. And that discipline is one of the biggest differences between people who create wealth and people who stay stuck. So, how do you actually find the extra $100 each month? There are really two ways to make it happen, and the smartest people usually use both. You either spend less or you earn more. Let's start with expenses. Look first at your fixed bills, the stuff that gets charged every month on autopilot. Your phone bill, car insurance, internet plan, cloud storage, recurring apps, memberships, all of it. So many people are overpaying for these things simply because they haven't checked their rates in forever. Companies love that. They're counting on you to stay comfortable and keep paying. A single afternoon of comparing plans, calling providers, or switching services can easily free up $50 to $100 a month by itself. And then you've got subscriptions. We live in a subscription jungle now. Streaming apps, meal plans, editing tools, fitness memberships, premium add-ons, random trials you forgot to cancel. Those charges stack up fast. A proper audit of all those recurring expenses can create breathing room almost immediately. Then there's your everyday spending. Changing how often you grab takeout, where you shop, what brands you buy, or how you handle impulse spending can save a surprising amount each month. The goal isn't to make your life miserable. It's to be intentional enough that your money stops slipping through the cracks. Now, on the income side, there are more ways than ever to make extra money. You can sell a skill online, pick up project work, tutor, flip items, help a local business, babysit, pet sit, do delivery on weekends, whatever fits your life. For a lot of people, earning an extra $100 a month is way more realistic than they first assume. And the exact method isn't the point. The point is commitment. Some people would rather cancel expenses. Others would rather bring in more cash. Either one works. The important thing is moving instead of overthinking. Once investors can't produce entry methods. Tell your story of what you think might be. And think that every $100 is coming from. The important thing is making sure it doesn't just sit there. You want that money invested so it can start working. That's where things really change. The second you begin investing that $100 each month, you enter a completely different financial world. Your money stops being static. It stops just sitting there looking cute. It starts producing. It becomes a little worker that never clocks out. Let's look at what that means. Over 10 years, if you invest $100 a month and get a reasonable market return, you don't just end up with the $12,000 you personally put in. That money could grow to around $18,000. So now you've got about $6,000 that came from growth, not labor. At first glance, some people shrug at that. Okay, nice, but that's not life-changing. That reaction is exactly why so many people stay broke. They're only looking at the beginning stage, not the machine being built underneath. Because the real magic shows up when you stretch the timeline. Take that same $100 a month over a 40-year working life. You'd contribute about $48,000 total. But the account doesn't stop there. It can grow to more than $350,000. Let that sink in. You put in less than $50,000 with your own hands, but end up with more than $350,000. That giant gap comes from compounding. That's the part people underestimate. Most of that final total didn't come from you grinding harder. It came from your money multiplying over time. That is one of the biggest differences between people who build wealth and people who stay financially stressed forever. Wealthy people understand there's a ceiling on what they can earn from their own effort. But money can keep earning without getting tired. Look at the math. Early on, growth feels small. A 10% return on $4,000 or $5,000 doesn't look dramatic. You might think, why bother? I could make that with one extra shift. But that mindset misses everything. As the balance grows, the same percentage starts creating much bigger dollar amounts. On $50,000, a 10% gain is $5,000. On $100,000, it's $10,000. On $300,000, it's $30,000. At that point, your investments are no longer a cute side bonus. They're becoming serious wealth. And this is why starting early matters so much. The difference between beginning at 24 and beginning at 34 isn't just 10 years of contributions. It's 10 years of lost compounding on every single dollar you could have invested. That delay is expensive. Now, the numbers we're talking about here assume around an 8% annual return, which is pretty reasonable. Historically, the market has often done better than that over long periods. At a higher return, that same $100 a month can push well past $500,000 by the end. And an even bigger share of that would come from growth instead of what you personally deposited. But let me tell you the part most finance creators skip. The hard part is not understanding the math. The hard part is staying loyal to the plan when the world keeps tempting you to spend. Every month you'll get tested. Do you send that $100 to your future like you promised yourself? Or do you use it for concert tickets, a cute upgrade, a spontaneous weekend, a little treat-yourself moment? This is where wealth is either built or quietly abandoned. The people who win at this usually automate it. They remove the decision. The money moves before they can talk themselves out of it. They treat that investment like rent, electricity, or any other bill that has to be paid. Paying yourself first isn't just motivational fluff. It's the base layer of financial freedom. And something really interesting happens once your account starts growing. You begin checking it and noticing those gains. A little bump here, another one there. Suddenly, investing doesn't feel like deprivation anymore. It feels rewarding. It feels powerful. And once that happens, most people naturally start looking for ways to invest more. Maybe you decide to put your bonus into your brokerage account. Maybe your next raise doesn't go toward a nicer car or pricier habits. Maybe you launch a small side hustle just to buy more investments. Once you watch your money grow without extra labor from you, feeding that process starts to feel way more exciting than random spending. That mindset shift changes everything. You stop asking, "Can I afford this?" and start asking, "What is this purchase costing me in future wealth?" That $100 splurge isn't just $100 anymore. It could be several $100s your future self never gets to have. People who build wealth understand that every dollar has potential. They're not magically more disciplined than everyone else. They've just learned to think in terms of time and growth instead of instant pleasure. When you really understand compounding, you realize your greatest asset isn't your car, your title, or even your current income. It's time. And every month you wait is a month of growth you will never get back. The beauty of the $100 strategy is that it's realistic and it's expandable. As your income grows over the years, you can increase the amount. Someone who starts with $100 at 25 might be doing $400, $700, or $1,000 a month later on. But the reason they got there is because they built the habit early. And even if you never raise it above that first $100, you're still doing something remarkable. You're creating long-term financial independence with one of the simplest, most reliable strategies ever. While other people are chasing flashy shortcuts or trying to outsmart the market, you're quietly using the method that has helped ordinary people build serious wealth for generations. At this point, a lot of people wonder whether this only works on paper or whether real people actually do this in real life. The answer is yes, absolutely. Millions of people have built meaningful wealth this exact way, and many of them started with very little. What makes this strategy powerful isn't only the return on the investments. It's who you become while doing it. You become more disciplined, more intentional, more aware of how you spend, how you work, and how you plan. You stop living only for the next purchase and start thinking in decades. And that mindset opens doors. When you have savings and investments, you gain options. Maybe there's a promising new job that pays a little less upfront but has bigger upside. Most people living paycheck to paycheck can't risk it. But if you've built a financial cushion, you can. Maybe you've thought about starting your own thing, but you need money to get it moving. Maybe an amazing property deal lands in your lap, but it needs a down payment fast. These opportunities don't only go to the smartest people. They go to the prepared people. That's another reason wealthy people keep growing wealth. Money earns through the market, yes, but it also creates opportunities. It lets you take calculated risks. It lets you invest in yourself, your education, your ideas, and your future. And here's the twist. The real goal was never to stay at exactly $100 forever. The goal is to create a habit that makes wealth building automatic. Most people who start at $100 don't stay there, because once they see the results, something clicks. They stop wanting to waste every extra dollar. They start wanting to own more assets. That usually leads to what I'd call lifestyle optimization instead of lifestyle inflation. Rather than spending every raise on upgrades, you send more of that money into investments. Instead of treating a tax refund like fun money, you use it to speed up the process. And that is where things really separate. Financial independence usually doesn't come from earning one giant check. It comes from making smarter, repeated decisions. Starting with $100 also proves something important to yourself. This is possible. A lot of people never begin because they think they need a huge lump sum to make investing worth it. So they wait and wait and wait some more. Meanwhile, time keeps passing. The perfect moment isn't when you finally have some giant amount. The perfect moment is when you begin with what you have. Once you've held that $100 habit for 6 months or a year, you build confidence. You trust yourself more, and that confidence usually spills into other money moves. Maybe you refinance a loan, switch insurers, negotiate your salary, or finally cut dead weight from your budget. Those improvements stack on top of your original plan. Maybe you trim $40 from one bill and $60 from another. Maybe you pick up an extra $80 a month from freelance work. Now, instead of investing $100, you're investing $200 or $250. And now the snowball gets bigger, faster. There's also something deeply motivating about watching your net worth go up steadily. For a lot of people, it's the first time they've ever seen their financial life improve month after month without needing more hours at work. Your money is literally doing something productive for you while you sleep. That feeling is empowering in the best way. Then you hit milestones, and it gets even more exciting. When your account reaches $50,000 and the market adds a few $100 in a good month, you really start to get it. At $100,000, a strong month can move the needle in a way that feels impossible when you're starting out. That's when many people enter what I think of as the acceleration phase. They stop being satisfied with tiny contributions because now they can see exactly what bigger investments can do. That's when they start hunting for more income on purpose. Extra projects, better jobs, more skills, new opportunities. Not just to spend more, but to own more. And that momentum is why the $100 strategy works so well. It gets the snowball moving. Now, will the market be perfect every time? Obviously not. There will be ugly years, corrections, recessions. Headlines designed to scare you. Your balance will sometimes go backward, temporarily. That's part of the ride. But over long stretches, patient investors have historically been rewarded. The people who usually fail with this strategy do one of two things. They never begin because they're waiting for the right time, or they start and then panic the first time the market drops. Successful investors understand that volatility is not a sign the plan is broken. It's part of the process. When you choose this path, you're choosing to play the long game. You're choosing delayed gratification over constant consumption. You're choosing patience over chaos. And those are exactly the traits that separate people who become financially secure from people who stay stuck. This $100 a month strategy is not glamorous. It won't make you rich by next Friday. But over time, it can absolutely make you wealthy. And that matters so much more than any flashy shortcut ever will. It's simple, it's proven, and it works for people willing to stay consistent. Your financial future is being shaped by what you do today. Every month you delay is a month of compounding you can't get back. The best time to start was years ago. The next best time is right now. Take the first step,